What I've always liked about rainy weather is how it clears the beach. So you get to have a beautiful beach all to yourself. And I've never understood why people complain about the rain. I mean, if it wasn't for the rain, we'd still be fish in the ocean. We need the rain to be on the land. But it is a little bit gloomy today in Sydney, and part of that, of course, is all the economic challenges and some stocks flying around quite a bit as well. So the Australian market today had this incredible rally on the idea that the presidents of China and the United States had had a chat, and that could mean a warming of relations and therefore buy Australian stocks. And to be honest with you, nothing could be further from the truth. It's quite probable that the United States will improve its relationship with China. That does not mean at all that necessarily Australia's relationship with China will improve with that. So that was a good rally, but it's probably run its course. The other reason, of course, was there was a great deal of speculation over what's happening with Sydney Airport, and these things will give markets a bit of a boost from time to time. And I dare say there was a large order that hit the market as well, and people have linked various dots which may not necessarily belong together. But that's what markets are. In the US on Friday, we saw stocks incredibly heavy and weak, and in Australia, for the Australian stock market during New York trading, it looked particularly heavy as well. So this rally we've seen today in Australia, I don't think is going to last. I still think it's a sell the bounce market. We're aggressively sort of warning of potential downside for stocks all of last week, in fact, all of the last 3 months. And we're seeing that unfold in the Australian market. We're only just seeing the US market begin to tip over though. US market was really in a bit of free fall on Friday. And it's something to keep an eye on, but I'd suggest to you that the move down so far seen in US stocks is only a small move compared to what risk is there. Markets always do what everyone least expects, and I still think that is a move to the downside at this point, given that inflation and Delta are going to continue to have a far greater impact on the real economy out there on Main Street than people in the ivory towers of Wall Street may suspect. So that's the disjointed sort of situation there between sentiment and reality on the ground, and how long can that last? And of course it's lasted a very long time during this COVID crisis. We've seen markets spend a lot of time defying gravity in terms of the old textbook approach, but that's something, of course, as traders we need to stay on top of. US economic data is bleak. UK data, monthly GDP sort of indicator for the UK, is showing a fast slowdown there as well, even though they have come out of lockdowns. Again, we're seeing this classic sort of behavior of a momentary spike in economic data before it quickly falls back and subsides to something less than people were hoping for. And I think that's going to be what we see in Australia as well as we try to come out of lockdown. We're seeing a real risk here of a two-speed economy, one for the vaccinated, one for the unvaccinated in New South Wales. We're seeing the likelihood New South Wales will open up, but when New South Wales talks about opening up, it's not really a total freedom type situation. As long as hospitalizations remain strong, you're not going to see an open slather reopening of the economy. You're going to see strict social distancing. All these things and other restrictions. And all of these things, including the 20 to 30% of people who will not be vaccinated, not being allowed to participate in the economy, all of these things will create a continued drag below trend economic growth for Australia. And as I've said too many times perhaps, but we were the first to say it, recession for Australia Q3, Q4, possibly even leading into Q1, remains to be seen. One point of view that I'm still pushing and reasonably confident of is that New South Wales runs the risk of being locked out of the rest of Australia for a very lengthy period of time indeed. There's a federal plan, but state leaders may not stick to that plan if they see still rather scary, frighteningly high case rates in New South Wales, which is what the reopening is likely to generate. So no quick turnaround there in border openings. Border bubbles have come back into play, and that's a good thing. Regional Victoria, regional New South Wales are freeing up, and that is great for the economy. but we're still going to have a large proportion of the Australian population in some sort of restricted fashion going about their daily routine. So the outlook is not yet all rosy. In terms of financial markets, I'm still cautious. Not cautious, I'm actually saying US stocks can fall rather sharply. Australian stocks had a nice rally today. It may not last. Gold has been sold off more aggressively than I thought it would, but I just think this is a buying opportunity for gold. I remain cautious on other commodities. I do believe the Australian dollar will continue to be in trouble as the US dollar strengthens and the Australian dollar has a negative story of its own. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.